Explain the definition of accounting. So once again I will revise the definition of accounting. Okay, after that I will go for the meaning of accounting. Okay, so in the year 19 definition of accounting, in the year 1966. In the year 1966, American Accounting Association. In the year 1966, American Accounting Association has defined accounting as, okay, so in short form we will call it as AAA. First A stands for American, second A stands for accounting, third A stands for association. Okay, in the year 1966, American Accounting Association has defined accounting as the process of identifying, measuring and communicating economic information to the process of identifying, measuring and communicating economic information to the informed judgment and decisions by users of information. So in the year 1966, American Accounting Association has defined the accounting as the process of identifying, measuring and communicating economic information to the informed judgments. Okay, informed judgments and decisions by the users of information. So this is the definition as per the American Accounting Association. Okay, so sometimes they ask for one last question: expand AAA. You have to write American Accounting Association for the expansion of AAA. Okay, so it is a process of identifying. Identifying means what? Determining. Okay, determining. So what they are determining? Determining the transactions which are to be recording in the books of accounts and the transactions which are not to be recording in the books of accounts. They are first going to determining the transactions. Okay, the transactions which are to be recording in the books of accounts are to be called as a financial transactions, and the transactions which are not to be recording in the books of accounts are to be called as a non-financial transactions. Okay, here they are going to identifying the transactions as the financial transactions and non-financial transactions. Okay, financial transaction nothing but the transactions which can be measured in terms of value. The transactions which can be measured in terms of the value are called financial transactions. Okay, non-financial transaction nothing but which transactions cannot be measured in terms of value. Though the transactions are taken place in the business units, but even though they are not considered the transactions in the books of accounts. Are clear? So identifying the transactions. What they are identifying? Identifying the transaction. Identifying the transactions. Okay. So what do you mean by transaction? Transaction is an activity which results in transfer of money or money's worth. Transaction is an activity which results in transfer of money or money's worth between the business and other peoples. Business and other peoples, and it changes the financial position of a business concern. So that the activity is called a transaction. Okay, determining the transactions which are to be recorded in the books of account. So that is the first step in the accounting process. Okay. Second step, measuring. Measuring means quantification. The quantification of transactions are to be expressed in monetary units. In monetary units. The monetary unit is the measuring unit of a transaction. The monetary unit is the measuring unit of a transaction. Okay, so measuring means quantification of a transactions are to be expressed in terms of money. In terms of the money. Money is medium of exchange. The money is the medium of exchange, and it is a standard economic value. So therefore, all the transactions are to be expressed in value. Value nothing but in rupees and paise. In rupees and paise. So that is measuring. Okay. And communicating. Communicating means transmission of the economic information. Transmission of economic information. To whom that economic information is transferring to the users. Means end users. Okay. That end users are called informed judgments. Informed judgments. Okay. So they are the end users. They are the end users. Okay. So they are judging about the economic information, and they will take some decisions on the basis of that financial information. The financial information. So that information is going to communicating to the end users. Communicating to the end users. Okay. So financial information, economic information. Economic information nothing but the financial information. Financial information nothing but accounting information. Accounting information. Okay. Economic information nothing but financial information. Financial information nothing but accounting information. Whatever the transaction has been made by business concern, the transaction information has to be communicated to the end users. Informed judgments who are taking the final decisions. To them, that information has to be communicated. That information has to be communicated. Okay, then they are going to be taking the proper decisions. They are going to be taking proper decisions. Okay, that is uses of information. Decision by the users of information. Okay, by using that information, the end users, nothing but informed judgments, will take the proper decisions in respect of various aspects. In respect of various aspects. So this is about the definition as per American Accounting Association. Are you clear? Okay. So in the year 1966, American Accounting Association has defined the accounting as the process of identifying nothing but determining. What they are determining in a business unit, they are determining transactions. Okay, there are two types of transactions are performing. There are two types of transactions are performed by business concern. Okay, so that is financial transactions and non-financial transactions. These two type of the transactions are performed by a business concern. Okay, we have to find out. Next, measuring. Measuring nothing but quantification of a transactions are to be expressed in monetary units. Quantification nothing but the quantity of a transactions. The quantity of a transactions are to be expressed in the monetary units. The monetary units nothing but in rupees and paises. In rupees and the paises, you have to express all the quantity of transactions in the books of accounts. The books of accounts. Okay. Next, communicating. Communicating nothing but transmission. transferring the information. What type of information they are transferring? They are transferring the economic information. They are transferring economic information. Okay, so economic information nothing but financial information or accounting information. That accounting information is transferring to the users. Who are users? End users. End users are judging about the information and they will take some proper decisions in respect of various aspects. Okay, here there are two types of end users are there. Okay, that is internal users and external users. Internal users and external users. Internal users nothing but who are working within a business unit, who are working in the business organizations. They are the internal users. Okay, external users nothing but who are the persons out of the business organizations. They are the external users. So these peoples are required some information about a business concern. That information will be sending in the form of accounting reports. That accounting reports may be in the form of financial statements or in the form of accounting ratios or in the form of pictorial presentations or in the form of graphs, in which the peoples are able to understanding in such a way that accounting reports are sending to the end users. Okay, end users can easily understanding that information and they can take some proper the decisions in respect of various aspects. Okay, so this is the accounting definition. Who are the internal users? Internal users are the management, proprietor, employees, okay, partners. These peoples are internal users. Before taking the decisions, they need some information about business. So that information will be sending to the users in the form of accounting reports. Okay, the accounting is used as a language. Of a business. If you want to communicate about a business concern, through which you are going to communicate through the accounting informations only, through the accounts only. So therefore, the accounting is used as a language of a business concern. Okay, if you want to talk about the profits, through which you are going to talking about profits through the accounts only, because what are the transactions has been made by business concern are to be recorded in the proper books of accounts. Okay, so the accounts are to be used as a language of a business concern. Okay, and who are the external users? External users are the government. The government is need some information about a business concern because the government is levying some taxes. So what the percentage the government is going to collect in taxes on the profits of business concern, they need information. Okay, and banks and suppliers. Okay, okay, and the customers and the Securities Exchange Board of India and other government agencies. So these peoples are need some information about a business concern. That information is sending in the form of accounting reports. Are clear? Okay, so this is about the definition. Okay. So all of you clear about the accounting definition? So as per American Accounting Association has defined accounting as the process of identifying, measuring and communicating accounting information to the informed judgments and decisions by the users of information. Okay. Next, meaning of accounting. So accounting is a process of the process of identifying, measuring, classifying, summarizing, analyzing, interpreting, and communicating, economic, information to the end users. The accounting is the process of identifying, measuring, recording, classifying, summarizing, analyzing, interpreting, and communicating economic information to the end users. As already explained, that identifying means determining the transactions which are to be recording in the books of accounts. Okay, measuring nothing but the quantity of transactions are to be expressed in terms of monetary units. Monetary units nothing but in rupees, in paise, or in values. Okay, in values, in paise, we are going to expressing all the quantity of transactions in the books of accounts. That is measuring. Recording. So recording means entering all the business financial transactions. The business financial transactions which are evidenced by documents. Because whatever the transactions has been made by business concern, that document should be have some documentary evidences. With the support of documentary evidences only, we are going to recording that the transaction in the books of accounts. Okay, all the business financial transactions which are evidenced by documents such as invoice bill, cash memos, okay, salary statements, receipts, passbook, etc. These are all the documentary evidences in support of transactions. With that evidences of documents, we are going to recording that transactions in books of accounts. Okay, so recording means entering all the business financial transactions which are evidenced by documents in the books. That book may be a journal or a subsidiary books. All the business financial transactions which are evidenced by documents are to be recorded in the book. That book either may be a journal or a subsidiary book. So we will learn in detail about journal and subsidiary in separate chapters. We have separate chapters of journal and separate chapters of subsidiary books. Okay, in that the chapters we will learn in detail about these two topics, these two aspects. Okay, so all the business, the financial transactions which are evidenced by documents, are to be recorded in the journal or subsidiary books in the chronological order. Chronological order nothing but day-to-day wise. Day-to-day wise, we are going to be recording all the transactions. So that is to be called as a chronological order. And we should record all the transactions in the scientific method. Scientific method nothing but we have to follow the double entry system rules. By following all the double entry system rules, we are going to be recording all the business transactions, financial transactions in the books of accounts. Either it may be a journal or a subsidiary books. Are clear? All the business financial transactions are to be recording with the evidence of documents in the books of accounts, that is either journal or subsidiary books in chronological order. Chronological order nothing but day-to-day wise. On what date the transaction has taken place, that date only they have to considered and they have to enter the date in the books of accounts. Okay, so chronological order and scientific method. In scientific method, nothing but according to the double entry system of bookkeeping. According to the double entry system of bookkeeping, the transactions are to be entered in the books of accounts. Recording. Okay. Next, classifying. Classifying nothing but dividing. So what type of the transactions are? The business concern is dividing the similar nature of transactions, because the business concern is not conducting only one-time activity. The business concern is not doing one-time transaction. Okay, so business concern is doing the same transactions in number of times. The same transaction in the number of times. So therefore, all the similar nature of transactions are to be divided and grouped at one place by opening an account. That is head of account. By opening one head of account, we are going to grouping all the transactions. Which transactions we are grouping? Similar nature of transactions. The nature of transactions are to be divided and grouped at one place by opening a separate account. That is classifying. For example, the business concern is not conducting only one-time purchase, isn't it? Business concern is conducting a number of the purchases. Okay, all the purchase transactions are to be divided and grouped at one place by opening an purchase account. Okay, so why the business concern is classifying the similar nature of accounts? In order to knowing the total amount of transactions. Okay, and different types of transactions. The transactions are to be recorded in different pages, and on different dates. Therefore, they have to come to know that what is the total amount of a particular transactions. In order to knowing the particular amount of a particular transactions, they are grouping all the similar nature of transactions and they are opening separate account and knowing the total amount. Okay, for example, all the purchase transactions are to be divided and they are grouped purchase transactions and they are opening purchase account. All the sales transactions are to be divided and all the sales transactions are to be grouped by opening a sales account. They can come to know what is the total sales they made during the year or during the month or during 3 months. Okay. Classifying. So rest of the topics I will discuss in the next. I will discuss in the next class. Okay. So thank you.